Okay, guys, just to give you an update and breakdown on exactly what we have been doing this week in regards to trades that have been taken and why those trades played out and why those trades didn't play out, and what the thought process was behind taking those trades and before those trades were actually taken, how we knew that the market was coming into a zone that we had to be looking for trades. So, in essence, you look at the trades from a top down scenario, and it actually means going down from the monthly right the way down to possibly even the 4 hour chart to understand market structure, to understand inefficiencies in the market, to understand liquidity and where liquidity lies on each of those given time frames, and what the market may want to do in terms of the short term and long term goals that is being shown to us on the chart. So what we do is obviously from the higher time frame we look down and we see that EU has been in a bearish run over the past few years, effectively because it's on the higher time frame. But we can see short-term market structure has broken here, and we are basically looking at a bearish reversal that's taking place and playing out, looks like into this area of interest, and then it's rejected from this zone. So at the moment it's showing us a possible consolidation within a shorter time frame bullish bias. So we go down onto the lower time frame and we start seeing exactly where there may be areas of interest that we want to start targeting. We look for inefficiencies, we look for imbalances, we look for gaps in the market where the market may be coming back to test and reverse into to take liquidity. So we can see these areas and gaps between wicks, which shows us that there's liquidity and price here that the market needs to come back and fill. So these are zones that the market will want to reverse into to take out liquidity to then create a move either out of this zone or in the region of this zone. So we continue to go down onto the lower time frames, marking out these areas of inefficiency and imbalance to understand the market movements. And alongside that, we also mark up areas of consolidation, areas of expansion, and possible areas of retracement into those zones to then allow the market to move out of. We can see as the market moves, it creates equal highs, it creates equal lows. So those are also areas of liquidity that we want to mark up and treat as a point of interest where the market will want to target. And we can see here, beautiful area of equal lows has been created over, a year or so approximately right now. But these lows have been targeted, taken out at this point and bought out of. The beautiful thing is that we could have actually anticipated this happening because we've got equal lows being targeted. The market would want to come into this zone to then either buy or sell out of this zone. So these are areas of interest that we're kind of marking up as we go along. We continue down into the lower time frame and we can see again we've got areas of equal highs. We can see the market is respecting a bearish bias, and it continues to do so until it gets to this point here where minor structure breaks, major structure breaks, and the market then shows a bullish bias. So short term, since the end of August, we've been looking at a bullish bias being created off EU, where lows were liquidated here, equal lows were taken out. The market came in, it came into a zone which could very well have been this OB on a shorter time frame. If you look at this, yeah, beautiful, right? So we've got a down to up candle here, which is our order block. The market should have come into this zone. Boom. Yeah, beautiful. Wicked into this zone, respected the zone, took in that liquidity, treated that as a point of reaction, and moved out of that zone. So effectively, when this trade played into this area here, we could have actually been in buys end of August at this point, protected lows here, boom, up to the upside, targeting equal highs. A 7.9 trade, very, very simple trade on the higher time frame, 4 hour. As you go down the lower time frame, this trade becomes even more beautiful because you would have waited for further confirmation. You would have waited for a break of structure to the upside. We've got equal highs. We've got break of structure happening here. We've got continuing push here. So effectively, this trade on the lower time frame could even have been taken at this point here with the wick set at this point here to be safe, and that's a 1 to 22 trade. If we wanted to be aggressive, we could have even targeted lows here, a 1 to 56 trade. So this is where the market has told us, I am now going bullish It's basically broken structure at this point here. It's shown us that it is going higher. There's a break of structure that occurs. It prints bullish. It reconfirms that again. This is a Newsweek, so we're not too fussed about that. But in any case, it reconfirms that again, comes up, fills this imbalance that we can see all the way up. Yep, break structure, fills the imbalance, continues pushing up, targets equal highs, targets the OB, sells out of the OB, catches liquidity again, moves off again, and continues to push. Bullish, 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 bullish. Low, protected low, protected low, protected low, protected low, protected low, continues on the way up. So that was a beautiful trade that could have been taken. Unfortunately, I wasn't in on that trade at that time. There was a short trade here that I took, and I kind of made my pips and percentage on that. I didn't leave it open. So we come into this week, and let's see what's happened over the past few days. So effectively, we've been in a bullish run, as we said, from the beginning of August. The market was continually printing bullish, continually creating lower highs, protected highs, respecting those highs, and continuing off. So we were left with areas of imbalance that the market had to come back into. So we've marked those up on the lower time frame. You've got an area of imbalance here. You've got an area of imbalance here. Efficient price, efficient price, efficient price, efficient price, imbalance. So we target this. And we can see that the areas that the market has left behind as imbalances are then targeted when the market reverses back down. So the market comes up, it's testing these highs, it's looking at liquidity that's lying up here. Equal highs means a lot of orders are up here. People have sold here, they sold here, they sold here, they sold here. Those stop losses have been liquidated at this point here, but the market again has not broken above this high, which means that this is now a protected zone. It continues to push, and we can see when it kind of forms this up and down scenario, people get liquidated along the way. Stop losses get taken, stop losses get taken, stop losses get taken on the push up here. You've got these guys taken out, these guys taken out, these guys taken out, but this area is protected. And then it pushes again even more aggressively than it did before. So it comes down, creates equal lows down here. We've had protected highs above. We've got liquidated lows down here now. It comes into our area of interest, buys out of the order block, and then prints bullish. So as it's printing bullish, obviously you've got people entering on the trades, on the retracements, and this is where you've got inefficient price action happening. When the market pushes off aggressively, it leaves a gap in the market. That gap has to be come back and filled, which we can see that over the past few days, the market's come, respected the highs, reversed, and it started now to revisit inefficient areas. Come in, respected it to the T, closed the wick, made that efficient price action, moved out of that zone, reversed back down, taken out that liquidity. It's not ready to go up further. Tells us that, by the way, I'm continuing down. So what we've got here is we've got break of structure. We've got break of structure, and the market continues on the downside. So it's telling us that I'm going down. So rejected highs, respected that high, rejection, rejection, retracement, comes back in to our point of interest that caused this area to break structure, which now is a change of character in the market. We're going from bullish to bearish. Bearish structure has been printed. We come back into our zone of interest. This trade would have been a beautiful trade to take on the downside. You could have entered off this area of interest, that order block that broke to the downside and left this trade running open. So effectively, we could have been targeting all of these areas of imbalance and inefficiency on the way down. But effectively, normally you just target the one that is closest to you. So that could have been a 1 to 4 trade on the higher time frame. Bear in mind, we're on the 4 hour. If we took this down to the lower time frame on the 1 hour, we could have entered this trade at this point here. And had a 6 pip stop loss with, targeting these inefficient zones here. A 1 to 7 trade. If you took it lower, a 1 to 15 trade. If you wanted to be crazy, we could have taken this down to the 15-minute. You can refine this as much as you want. As people said, the market is fractal. You can go down as low as you want. We are still in our area of interest. So this is the candle that broke structure to the downside. As we can see, came into this zone. This area respected the lows. This area came in, broke structure. And we could have used this as our point of interest. We could have entered this trade on this candle, and we could have set the wick above that candle. A 1.8 pip SL would have been respected, as we can see, continually respected. And that trade now goes from a 1 to 7, 1 to 4, I think it was, to a 1 to 14. Just because we refined on the 15-minute, you could go even lower. Yeah, you could take this down as low as you want, depending upon your own appetite, how aggressive you want to be in terms of the way you trade. It could have gone to a 1.4 pip trade, and you could have been in a 1 to 18 trade. And as we can see, it played out like magic, falling out of that zone of interest, out of the order block that broke structure, and continued to basically respect. And if you wanted to hold this trade, you had the balls to hold this trade, you could have held this trade to 1 to 50, you could have held this trade to 1 to 58. Yeah, if you wanted to, you could still be in that trade comfortably right now at 1 to 52, and your SL is still safe. This would have been moved to break even, you're risk free. You could have even moved your entry SL down to 50%, protected your profits, and you would have been calm in this trade. So regardless, that's part of the principle of what we're looking at here. So we've got break of structure. We know the market's going bearish. So we could have entered on the counter 10 trades, bearish, 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 bearish. What we did was we looked at trades coming in on the upside, and we had trades coming into the areas of inefficiency on the 4-hour. So we were targeting these trades, buying out of inefficient zones. And when the market came into these zones on the lower time frame, we were looking to see how the market reacts. So the inefficiency is marked up here. This is the protected level. When the market did not break down below this, we took trades at this point with our SL set at this point and looking to the upside. And there were trades here to be had targeting areas of interest that caused market structure to break again. So we've got trades here. We've got a retracement that was tested again at this point. Again, this one stopped out. We then understood market is breaking structure. So on the higher time frame, it becomes even more clear. We can see the market's respected this zone, bought out, higher time frame, boom, candle blows right through the zone. So we now know that we're targeting an area below. So we come into this area above this area of imbalance. This is also an important area that we could have considered. The market is targeting as an OB to buy out of, because it broke structure to the upside again. There's a good aggressive move out of this area. The market came in, respected that zone. Looks like it's doing something. I think a trade was taken at this point here as well. So we took this trade with a 2-pip stop loss. It was maybe even respecting that zone. So respecting that zone, 4-pip stop loss, going to the upside, targeting highs. The market never really reached. This was a break-even trade, 1.5%. Again, the market told us, by the way, I'm not going up yet. I'm out of steam. Breaking back down, broke down, targeted this inefficiency, picked up liquidity again. We looked at how the market reacted to this zone. It broke low. So there's no trades to be had because this area has already been disrespected. And now what we were looking for is we're looking for the market to target this area of interest, which is our order block, the last down candle before the large up move that broke structure. We unfortunately had equal lows down here as well. So it was a hesitant trade in regards to, will these lows get taken before the market moves up? There's also areas inefficiency down below as well. So what happened here was we were targeting this trade. This trade didn't happen. It didn't play out, got disrespected. The trade moved out of the zone, came into our OB, respected that area. If you go down onto the 1-hour chart, you don't need to look at this on crazy time frames. So you can see exactly what happens even on the 1-hour chart. The market comes in, wicks the zone, take a trade here. Protected areas are created in that OB. Set your stop loss there. Look for the upside. So This is another trade that was taken, 2.5% taken and banked on that. The market came back into our SL zone, respected the zone, didn't take us out, and continued up higher. So this would have been a trade that could have been held. I closed trades the end of Thursday, and we exited our trades at 2.5% here. Market consolidated, didn't trade at all on Friday, and have left the market now to do what it needs to do, as Monday and Friday usually are dead days. Now, what we're looking at is this area has been targeted, the OB has been taken, the market has reason to now retrace lower. Above us, we can see that there's efficient price action all the way down. There's nothing really for it to grab. Equal highs are left behind here, which could be an area that we're going to come back and target in the future. So this area is liquidity. Other than that, zones have been taken, if inefficiencies have been filled, and the market is now looking to me to be on a bearish run. It may test these equal highs before it starts dropping, but I think it's then going to drop down lower. It's respected this zone. It looks like it's coming back into this zone. I don't think it's now going to respect it. It's aggressively moving into this area. It's probably going to take that out, target this liquidity here, drop down into this inefficiency, and then we will see how it reacts out of this zone to see whether it buys up or whether it comes into this zone, plays around, and then breaks down to then target a lower level of inefficiency before it then buys up out of this. It could possibly be targeting this last OB that created the breakup structure to the upside for this whole move. So this would be the zone that we're looking for. Bear in mind that possibly it's also left back behind liquidity down here with some form of equal lows. It looks like this liquidity has been cleared before the upside, but that could be an area that is also targeted. So we're looking at this as our last point of interest before the market then buys up out of this on the short-term trend to move bullish. Hope that makes sense. If anybody has any questions, please do get in touch. Let me know what your thoughts are. And if there's any questions that I need to answer, I can do.